And good afternoon. Welcome into Market Talk on this Monday, May 2nd. Great to have you with us here. Thanks for joining us and making us part of your day. I'm your host, Jesse Allen. We're broadcasting live in Washington, D.C. here today, as it is the National Association of Farm Broadcasters Washington Watch. It's kind of a fly-in for farm broadcasters, talking to senators and industry leaders and more here throughout the first part of this week here in D.C. So we'll have the show the next couple of days here live from Washington, D.C. As we take a look at the market trade, starting off the new month and the new week with quite a bit of pressure throughout soybeans, corn, spilling into wheat as well, while the cattle market's moving higher thanks to the cheaper feed prices. Got plenty to discuss. Let's bring in our good friend John Heinberg with Total Farm Marketing here this afternoon. John, good afternoon to you, sir. And coming into a new month, not the way we wanted to start here today. A lot of downward pressure in those grain markets, corn and soybeans specifically.
Yeah, I was a little fearful of this actually. It kind of started Friday afternoon, and when that equity market just basically let loose in the last hour of trade and finished 900 points lower. So it just kind of set a tone for the weekend. And we saw maybe some improved weather. So maybe we're talking a little bit of planting pace. We'll see that number here this afternoon. And just even the way the corn market kind of settled, or the grain market settled out on Friday, it just felt soft. And we're in a window where we're overbought and things are due to get some pullback, and we're seeing a little bit of technical selling today. Not sure if the fundamentals merit it or not, but it's going to be that time frame that we can see things happen, especially if we see some good planning progress here today. I mean, let's get started with that bean market. That's really where the issue is today. It's actually in that bean oil market. Big reversal on Friday, strong follow through. On that market today, we're pushing, $4 or $5 a pound lower on some of those front month contracts. That relates into 30, 40 cents lower on beans, because that's been a lot of support underneath that market. Corn's following suit, obviously, just because of the technical break. I didn't like that gap we put in the chart on last night's trade to start things out. Just kind of tells me that maybe some sellers are ready to kick in. Wheat's been two-sided today, but we're going to watch those wheat condition ratings very closely here at the end of the day. It was actually trying to be positive for a while, and it's faded back as well here. So we got a lot of little pieces moving, but I'm not surprised. You look at the calendar, time of year, things of that nature too. Just a spot where maybe the funds have held this long enough, and maybe they take a little bit of money out. Now we'll see if the demand wakes up to go with it. Sometimes we get these pullbacks. We'll see somebody step right back into that market right away. So that'll be a big test here as well.
Well, and I wonder, a couple things you mentioned, and just going on the demand side, I know China markets down there as they celebrate their Golden Week holiday. So I think they're back Thursday. There's some rumors of some weakness in the Chinese economy, but then you see, grains pull back, and one has to wonder, come Thursday, if we still have cheaper prices than what we had, will the Chinese step back in and buy? I know there were some rumors out there in the trade to end last week as well, John.
Yeah, and I think that's going to probably be the case. There's just concerns on the global food supplies that they may be stepping up and continue to cover those supplies, especially into those new crop beans and corn. I mean, we've got record sales on the books for those two combined right now. And it's impressive to see how much they've stepped into that market for the new crop side. And I've also liked what they've done on the old crop corn side in here too. So, there's some other things that were factors in here. We're running a bit of a premium on that soybean market to the South American bean right now. So that's still a big factor here in the short term. Looks like export prices, they've got us beat through June and July. But then in August, we're the best market out there, and realistically until 2023. So that's why we're seeing the sales kind of pile up the way they are. So again, I wasn't surprised by this, especially in the beans. I was kind of been talking about that with clients here the last couple of days, and encourage some sales and things of that nature in this window. And just because of where we were, and we had some good value that we needed to take opportunity on. So again, that'll be a big key. We'll see what happens here. Obviously got to watch what these products do for beans and corn, or for soybeans. If we continue to see further break in oil and meal prices, that's just going to make it very difficult for us to rally here.
And I find it very interesting on the weather side. You mentioned some of that weather and a lot of moisture throughout parts of the plains here the next 6 to 10 day. And that almost seems to be, traders are taking that over, the planting delays and some of the, the backlog we have. And like you said, it'll be interesting to see what the crop progress report shows this afternoon. But I just found that very interesting, and especially the wheat market. Even not breaking more on the wheat market with some of the rain forecasted for parts of Kansas here the next couple of days and some of the rain we saw over the weekend, John.
Yeah, that weather factor is going to be a big part of it. Again, we'll get those crop production numbers out at 3 o'clock today, 2 o'clock Eastern time, or 3 o'clock Central time. We'll have to see where they come in. We're expecting corn planting to be about 16%. We were 7 last week, so obviously still well behind pace. Soybeans around 8% planted. It depends on the area. I heard some of the areas, Western Corn Belt, where things have been drier, they've been going 900 miles an hour getting stuff in the ground. Talking to a few clients today, some guys are starting to push. They don't like the conditions at least, but they're at least trying to get some stuff in because, again, they're looking at some rain coming for the next couple of days, and these cooler temperatures are still the big factor. So we'll have to watch that. And again, too, Kansas wheat conditions, what's going on there? Expect winter wheat conditions to maybe tick up a notch, 28% good to excellent versus 27. That's still pretty doggone awful overall. And then what's that planting pace in that spring wheat too? About 20% done. That's still going to be well behind pace here with the moisture they've dealt with. And, seeing some pictures over the weekend on social media of just, the ponding in some of those fields. And those North Dakota soils don't like to dry out real fast unless we get some temperatures. And we're not getting those either right now.
Do you think we have fully entered into a weather market at this point? I know there's so many factors out there, but do you think now with that calendar flipping to May and just the dynamics we're seeing, have we fully entered a weather market for the time being?
Not sure on that yet. I don't think so. I don't think that premium's really put in. I mean, you kind of look at what the balance sheet could be here with the USDA report on the 12th and where we are for price. Maybe we're a little bit overreached right now because of the demand side and the inflation talk that's into the market. Not really sure we've kept the price for weather in here. So that's why I said a little pullback here to me opens things up for another run out. I think we need another true news event to get that next leg if it's even going to happen. We're getting pretty toppy here in terms of the historical highs here. Obviously, that close on that front month corn last on Friday was, an all-time high close for a monthly close. That was, so again, we're at levels that we were historically could take some money out of it and still have a good market in front of us. And maybe that's the start of this today. The depth of the correction is what we got to watch for. And, looking at some key support levels here and testing some moving averages, 50-day on the soybeans. We haven't been under that for a while. We did fall under it, on the last correction and pop right back over it in the next couple of days. Corn, we got a couple different support levels here as well and some uptrends. So it's kind of going to be interesting to watch the close today, see what the news comes out this afternoon. If that does come back very friendly in terms of those planting progress numbers, from what I've heard, not a lot got done out there, especially in the basically east of the Mississippi. That we could see some numbers that could stay fairly friendly and support this market. So we'll see what turnaround Tuesday might give us.
Definitely. Let's go to livestock today, John. Cattle market definitely loving the pullback in grains here today. Feeder cattle up sharply. The live cattle fats up well as well here today. What's your thoughts with this cattle market to start the new month, John?
Yeah, nice move today. And it felt like things were getting a little overdone last week on the sell-off. And it was kind of disappointing. Some of that to me is tied to the expiration of the April contracts, Thursday on feeders, Friday on lives, and options coming off too for feeders on Thursday. So that just brings a lot of extra pieces to the puzzle. Throw in the technical breakdown in the charts as well, and that brought the sellers out. Now with that, let's look at the reality. We had June cattle all the way down to 133. Cash trade still holding pretty firm around 140. You're already seeing a $7 discrepancy there. So that told me June was undervalued. So we're getting some step back there. Talking to a couple cattle producers, they were locking cattle in for the end of May, basically at these same levels that we sold last week for. So that tells me there's some support, at least on that side. The other factor that we really need to keep an eye on for cattle is still going to be the spring demand here. We have these cool temperatures have kept kind of the grilling window a little bit further back. So we're kind of waiting to see something kick in there. So nice recovery. Got some nice reversals on the charts in terms of bullish reversals to the upside. But we'll have to see. There's still a lot of headwinds out there. I'm a little nervous that cattle market. You get all these economic stories out there globally, and it's hard to get overexcited. That maybe we see a short covering pop here, and I hope it's just not the infamous dead cat bounce and we go ahead and test some lower levels. But today was a day. We're looking at those charts. We needed to dig our heels in, and so far we have.
Hog market is trending a bit lower here today. On the flip side, what are your thoughts with the hog trade here? I'm a little surprised we're not moving higher with cheaper feed prices.
That story is getting a little bit bigger than we want it to be right now in terms of the price move and the technical breakdown that we have in these markets. And It's really kind of scary. It looks like we got a chance to take hogs all the way down to the dollar window in that June contract. And we've been bouncing around a couple times. They did get positive on some of those deferreds and fell back to negative, and now we're down sharply. It's a demand situation right now. That's the biggest thing that's weighing on that hog market is just the concerns regarding the export demand. You go look at sales to China this year compared to last year. We're down significantly, if basically compared to where we were just a couple of years ago. Some of that's just the fact that their hog herd is where it needs to be in terms of getting their own product. So I think the concerns going the COVID lockdowns in China and the slowdown of demand there also comes into this marketplace as well. And then it's just become the technical sell level. We had a lot of premium in that market over the cash. Well, that's been quickly evaporated and to the point it's now at a discount. So maybe we're getting to the bottom of here. The fact that I've seen it swinging both sides of the coin today, been positive to negative, back to positive, back to negative, kind of tells me that volatility says maybe we're getting to a bit of a bottom. But obviously, I don't have any signals here yet. I still like the longer term picture. The fact that we're seeing that weakness way out there in the third and fourth quarter, it looks like a bit of an opportunity because the hog numbers are still not there. It's just a matter is the demand going to be there, with that tightened supply. So to me, it looks like a little bit of a window of opportunity maybe coming in to get some length out in that fourth quarter on those December and February hogs for next year, or maybe in those Octobers. But right now, I'm still not seeing an end to the selling pressure, especially with, a little bit of time to go in the day.
How about the dairy market, John? What are your thoughts there as we start the month of May?
Dairy market continues to stay choppy and volatile, very range bound right now to me. Look at the May contract. We had a little softness in cash and cheese trade, cash cheese trade again today, and butter trade. Basically you can draw a line at 24 underneath that May contract and draw a line at 25.50 on the top. And we're kind of building that range. Now watch a close if we go under 24 bucks in May. We got a moving average here. 50-day moving average is holding this market right now. If we break that could see some more profit taking, but the demand continues to stay strong. So that's going to be a big key. Watch those product prices. If they can hold in here, that's going to keep this milk market supported. But again, as a producer, you got some definite signals that this chart might be getting a little bit tired on these summer months. With this 24 plus level, got a reversal up there from about 10 days ago. Now we're holding the bottom end. Just looks a little soft that if we get the right signal that we can see that milk market kind of roll over and take some profits out just because it can.
I know also it's Fed week on Wall Street, and I know the stock market's mixed. The dollar's still near those 19-year highs, and that's creating headwinds, of course, for everything. What's your thoughts going into Fed week and just looking at that equity trade here in those outside markets, John?
That close on Friday really makes me pretty nervous where that chart can get to and where the prices can get to. And, we're even watching it today. Just can't seem to get any traction in terms of the Dow numbers or the equity markets, and got some more downward pressure probably still in front of us. We're anticipating the Fed's going to go ahead and move those interest rates, hopefully a little bit more aggressive to try to get inflation under control. I think the market started pricing that in a little bit here the last week or so. Again, those are all going to be things that are just going to stay as variables out there. Again, over the weekend, you're hearing talk of, Chinese economy being slowed, European economy being slowed. Where are we at in those types of stories? And that makes me nervous when you start talking about all these markets, especially with the amount of money flow that's into them, that, we need to be a little cautious here because, again, those black swan headlines can really take some premium out in a big hurry.
John, before we run out of time, any final thoughts you have for us here on the show today?
In that grain market, producers, I know things are tough today, but boy, there's a window in here. You probably, we're sitting on the 1st of May, and if you're kind of behind on sales, you need to make sure you're rewarding this rally. You'll have opportunities to re-own it down the road if you want to, even though if you do or don't, it's still a great price window. So again, make sure you stay disciplined to that cash side here and take advantage of the market that's in front of you. We started making a lot of sales last week, just talking to guys, fearing that this could come in a little bit here. So that's something you just want to make sure you do. Prices are going to move. They're going to be volatile. We got those new trading limits today. And hopefully we don't test them. 50 cents on corn and $1.15 on beans and 75 cents on wheat. But all we are is another technical break in that money flow, and we can very easily test those numbers.
I didn't get much of a chance to ask you about that, but we'll hope we don't have to test those limits, John. Exactly. If producers want a little advice with their marketing, I know they could reach out to you and the team there at Total Farm Marketing very easily. How can they do that, John?
Sure, I'd love to chat with them anytime. Give me a call, 800-334-9779. Shoot me an email, jonh@totalfarmmarketing.com. And again, we got our website there. Don't forget about that, totalfarmmarketing.com. A lot of great information, free trial to our newsletter. Feel free to check out that site and get yourself signed up for some information.
John, we appreciate the time. Thanks for joining me on a Monday, sir. Have a great week. We'll talk to you next week.
Sounds good. Have a great week.
John Heinberg with Total Farm Marketing, our guest today on Market Talk. That's going to do it for the show. Live from Washington, D.C. on this Monday, May 2nd. Find us, markettalkag.com. I'm Jesse Allen. Have a great afternoon.